Kam Brar here. Hey, you hear so often people say if you could just save a few extra dollars and put it towards something else, it will save you thousands of dollars. But let's face it, it's pretty hard to understand what that means until we put it into a real world, real life example. So I thought I'd share one with you today. Let's pretend that you took out a mortgage for $345,800. How did I arrive at that number? Quite simple. I took a $350,000 purchase. I took off of that the 5% you would put down, added back the CMHC fees, and lo and behold, we're at $345,800. That comes with a payment of $1,679. That's essentially what you would be paying per month for that sort of a mortgage. Now, I started thinking about it and I thought, you know what? People spend a lot of money these days on a lot of different things. So, how could just reducing a few dollars a day, but instead putting that towards your mortgage or increasing the mortgage by the equivalent amount, save you money in the long run and time as well? Let's look at how this could work. For example, let's say you were to cut out $5 a day, only 5, that's all I'm asking you to do, $5 a day out of your budget. So that would maybe mean one less Starbucks coffee. So let's say you eliminated that and you did that every day religiously for the 30 days. That's $150. Now, if you were to increase your mortgage payment by $150, do you know how many years you could take off your mortgage? 3. That's right. That would allow you to take 3 years off your mortgage by simply drinking one less cup of coffee, one less visit to that Starbucks place. So that got me to thinking, what if we were able to do a bit more? Now, what if we were able to do it $7.50 a day? You probably could if you really thought about it. You make a stop at Tim's, you go to McDonald's, you go somewhere else. So let's say you took $7.50 out of your budget. What would that really mean to you in terms of that same mortgage? Would you believe that if you did that after the end of a month and you contributed that amount of money, that $225, and stuck it towards the mortgage payments, you could take 4.5 years off your mortgage? I'm not kidding, 4.5 years. It's absolutely crazy. And that's not a whole lot, $7.50? Heck, I'm sure you can come up with that. That's not a ton of money. So, what about if you got aggressive and said, you know what, this sounds like a really cool idea. I want to take $10. That's right. I would love to do $10 a day. After the end of a month, I'd have $300 extra I'd be applying towards my mortgage. So basically, I increase my mortgage payments by $300 a month. That same mortgage gets down to a time frame, well, basically, you get to reduce the mortgage by 5 years and 4 months. So let me get this right. $10 a day, you spend less, so a couple less visits to some place every day. You can take effectively 5 years, 4 months off your mortgage. You can take that 25-year mortgage you started with and now you're under 20. That is absolutely unbelievable. Now, for those of you who want to go hog wild and do a bit more, I thought I would go crazy and let's do $15 a day. Okay, now $15 a day for some of you might seem like a lot. That's $450 a month. But if you really looked at your budget and you looked at where you spent money, I bet you probably could find that. Now, the question is it worth it? Well, that is the million-dollar question. But in this case, that simple reduction, that extra amount that you would put towards your principal would basically take 6 years, 3 months off your mortgage. So can you imagine, like we started originally, can you not having to pay that payment we began with, that basically $1,700 payment, and not have to make it for an extra 6 years and 3 months? That could mean, well, it would mean a tremendous amount to you. So I wanted to look in perspective so you could understand what spending less, saving more, allocating it to your mortgage, what a powerful effect that would have. So that's right, it would absolutely have an amazing effect on your overall financial situation. That $1,679 that you're not paying out for 6 years and 3 months on that $15 a day example could mean, well, I think about how many other places you could spend that. And really, when you start thinking about it, $15 a day or $5 a day or $7.50, when you start putting the effort into saving that and think about the long-term advantages of doing so, it's not going to feel so hard. So if 15's too much, 10's too much, 750's too much, go with 5. Start small. It's like working out. You're not going to run the marathon the first day. You're going to start 1 mile at a time. This is a great benefit to doing so. And you remember, even 5 simple dollars every day, one less Starbucks, one less Tim's coffee or donut or whatever, one less Big Mac a day, could basically take 3 years off your mortgage. And in the long run, that's 3 years of your life you're not spending working to pay off a debt. And that cash is going to do so many other things for you. You could allocate it to different places. And that's one simple step. So I challenge you, if you've got a mortgage right now, take a good hard look at it and start committing to putting that extra money against it. There's no time and there's no need to wait. It's something you can begin right away because most mortgage companies allow you a generous pay down privilege. And I'll tell you, $150, $300, $450 a month is not something they're going to stop you from doing. It's going to go right to your principal, reduce your time, and leave you financially stronger in the long run. This has been Cam for Cam's Mortgage Minute. I hope you've enjoyed this session. I hope you've learned something from this. And I would challenge you, go out there and start doing this. It's a financial freedom. It's going to allow you to live financially free much sooner.